Hello, this LP3 training video is for config loan info. So select config and loan info from the menu. To understand loan info, let me go ahead and click on config and company information. LP3 software was designed to handle multiple loan types depending on what state you're in. Texas, for instance, has regulated loan, sometimes called small loan, which is 342F, which is the state law that identifies the loan type. We also have open loan, which can be used for other states, which is configurable loan types. Installment sales, so if you're going to do installments on like selling items, washing machines or TVs or whatever, if you're doing installment payments on that, we have that as a loan type. Large loans in Texas, which is 342E, and I'm using Texas as an example, but the software will work for most any loan in any other state or auto club. So this particular demo has regulated loan selected. So we come back over here to loan info. Regulated loan, which is small loan in Texas. Loan information is the settings for whatever loan type you have, whether it's the small regulated loan, open loan, large loan, installment sales. These are the loan information settings that you can tweak for a particular loan type. And you'll always keep the same loan type, whether it's small loan or large loan. The loan type will always stay the same, but you might tweak certain settings underneath loan information. If, for instance, this particular company is set up as a regulated loan, which is small loan. So when loans are made, the state has specific guidelines, like you can only lend so much. Well, for instance, Texas may currently, the max loan amount for this type, $1,460. Well, you might choose that you only want to lend $1,400 maximum for the loans. So you can set the max amount that you will lend, and then you can set, or the max amount that's allowed by the state, and then you can set the max amount that your company wants to lend, which may not be the max amount allowed by the state. Acquisition charge, for instance, Texas, $100 is the maximum amount that you can charge as a fee for creating a loan. And that's based on, for instance, $100 for 1,000. So it's 10% of the loan. So if you lend $100, your acquisition fee is $10. If you lend $200, your acquisition fee could be $20, $30, so forth, up to a maximum amount of $100. If this ever changes, it can be adjusted here. But if you lend $1,400, the maximum acquisition fee is still only $100. So after you go above $1,000, $1,100, $1,200, $1,300, $1,400, you still can, your maximum acquisition fee can only be $100. So 10% up to $100, depending on the loan. The setting new loan, use new acquisition rate. So if you have this selected and you didn't use your acquisition charge on prior loans, then you would select this, and any new loans would then fall under the new setting changes for max acquisition amount, depending on how much is lent, and the percentage, depending on how much is lent. So 10% up to $100 is the charge. This is selected if you want to use that on use the new acquisition rates on new loans. So renewals, if you want to restrict the new acquisition rate to only raises. So for instance, if somebody borrowed $500 and you renew them at $500 and you keep renewing them at $500, if you have this selected, you won't use your new acquisition rate. But if you raise their credit amount to say $700, $800, $900, and you have this selected, then it will use the new acquisition rate. Allow pay to others. If you're creating a loan and you want to allow when they receive their money, say you want to write a check out, they come to get a loan to pay a utility company. Well, if you want to have it to where you can generate checks that specifically go to the utility company versus to straight to the customer, allow pay to others will allow you to generate those, for instance, checks to be sent directly to utility or whatever the customer's coming in to get the loan for. And that's for small loan. A lot of times this will stay the same, but you might want to adjust this as laws change, as you're allowed to lend more, or if you want to keep your company at a specific amount, then these would stay mostly static. They won't change often. So open loan. Open loan allows for much more configuration of the loan. Depending on your state rules, regulations, laws, we can set the loan types to abide by those laws. Minimum loan amount, maximum loan amount, max legal loan amount. Allow multiple payments. So if you want one payment, or if you want multiple payments for open loans, if you have open loans selected under company information, open loan. Allow pay to others. Again, like small loan allows whenever you're generating the loan that you can have payments go out to say bills that you were going to pay with taking this loan out. The interest calculation method, how interest is calculated within the loan. I'm not going to go over that here, but this will more than likely stay the same. And the options are either no interest, the amount of dollars per 100, percentage of the term, or simple interest. Interest rate, the acquisition rate calculation, loan amount times rate, term of months or terms. Acquisition per $100 rate, so $15 per 100 lent is what you'll get back as return on your loan. So you can have, so if you lend out $100, when they pay you back, they owe you $115. If you lend out $200, when they pay you back, they owe you $130. This can be changed to 20, 30, 40, whatever. This is completely configurable, the acquisition rate per 100 lent. Acquisition refund method, all the other settings, PMI, max acquisition type, term loan, all these items will be set up depending on what the regulations are for the particular state. So mostly understand that open loan options is set up when the loan is created, and most of this stuff will not change. This will be discussed with potential customers depending on your state regulations when your loan is created. Just want to make sure that you understand that this area under loan information and open loan type is completely configurable. Large loan options. In Texas 342E large loan, you have the max amount that can be lent, max amount allowed by law, the maximum acquisition amount for the large loan, and then the breakdown on rates. So a large loan in Texas, after a certain amount of time, it's like the first 12 months, you get this much percentage back on your loan for interest, and then from 12 months to say another period of time, say 18 months, you get another percentage, and this is the breakdown of that percentage based on the amount of time that you put in for your loan, whether it be 6 months, 12 months, 18 months, so forth. It will be set up for you if you're doing that particular loan type. Allow renew from small loans. So if you wanted to add large loans, if you have 342 license in Texas, you could do small loans or large loans. If you wanted to allow people to go from small loan, which is 342F, to a large loan, you would check this box. But most people don't do large loans. They do one or the other, either 342F or 342E, and this will more than likely not be checked, and you will just be doing small loans 342F. And allow pay to others is also available under large loan options. Installment sales. Sales rate for installment sell options. So if you're going to sell stuff, what percentage of sales tax you're going to charge. Charge options. If you have NSF fees, or if an NSF fee is chargeable, so if somebody writes a check and it bounces at the bank and you get charged by the bank, does your state loan type allow you to charge a fee? Yes or no? Then you can put that fee amount in here and it'll automatically add that if you add that fee if you put in the software under a particular loan that somebody had an NSF fee. Auto title fee, how much that is, and sales tax rate for installment sales options if your company is under installment sales. Security options. Are you allowed to secure the loan by some type of property or auto or things of that nature? Whether when creating the loan, you can add a security item. So allow secure loans if this is checked or not. This right here, go ahead and show you. We go ahead and create a new loan and show you it is selected, so we can secure the loan. Go ahead and create a new loan. And items in red are what's required to create a new loan. Go ahead and create an account. Okay, so we're creating a new loan, and right here, security type. If under loan info, allowed security is selected, then it will allow you to secure the loan through personal property. Somebody writes you a check that you can cash on at a specific date and time later. ACH, automobile. Go ahead and cancel the loan. Just want to show you where it was. Cancel loan creation, yes. Exit. Come back over here to loan information. If this allow secured loans is checked, then that option is available when creating a loan. If it's not checked, then you can't select a security item when creating the loan. Print security agreement. So when you're creating a new loan and you secure it, do you want to automatically print the security agreement when it prints the loan contract? If this is checked, it will automatically print the security agreement for them to sign also. Print security for a BR, which is a borrow renew, or a no cash renewal loan. So if a customer has secured a loan and they're a new customer, and it will print out the security agreement for them. If they come back in and they renew the loan, if they're renewing to a new loan, do you want to print the security agreement for people that are just renewing? Well, if this is unchecked, then if they're renewing a loan and they've already had a security agreement print out, it won't print. But if you have this checked and they're renewing to a new loan and you want to just have the security agreement reprint for them to sign again, have this checked and it will print out. And if it's auto print title certificate, if this particular company had auto, or it was an open loan and you could secure with auto, print the title certificate. If this was checked, it would print then. Some payment options. So if there is an option and it has an underline, if you put your mouse over it, it'll give you a little bit of information, more information on what options you have for this particular item, or explain it a little bit better. Apply payment to interest earned on payment date. So the options are either this checked or unchecked. Apply payment to interest earned on payment date. And if it's unchecked, you apply the payment to interest earned on due date. So you can either apply interest earned on payment date or on due date. Print renewal offer on receipt. So whenever you're doing a receipt for a customer and they can renew their loan, do you want it to print the renewal offer? You can have it on all customers if the customer is not past due, or none. So if you want the renewal offer to be printed, yes or no. If you want it not on past due, so you don't want to offer to people to renew that are past due, or just have it for all customers. Print payoff amount on receipt. So if you want the customer to know how much they, for instance, they've made 2 or 3 or 4 or 5 payments, and every time they make a payment, if you want the payoff amount to show on the receipt, so how much it would be to pay off, you can have that printout too on the receipt. A lot of people have this turned off because they want the customers to come in and make all their payments and not pay off early, because you don't earn interest if they pay off early. Interest is earned over time. So, but you can have it add that payoff amount on the receipts if you want to. Print 2 receipts per page. So if this is selected, when you print a receipt, it will print 2 out per page. Show partial payment message. So if a customer owes $100 and they come in and they only pay $50, do you want to notify your staff that this is a partial payment? Most of the time you want to take a full payment. You don't want to take a partial payment. You take a partial payment, people are still late, you still have to do collection work on them. So depending on what your company settings are, maybe you don't want to take partial payments. But if you do take partial payments, maybe you want to notify your staff that, hey, this is a partial payment. Are you sure you want to take a partial payment on the loan? This checked will notify your staff that it's partial, and then they're like, yes, we understand it's a partial payment. If this is unchecked, it won't warn them that it's a partial payment. Just a way of just reminder that if your rules are not to take partial payments and your staff starts to take one, hey, are you sure that you should be doing this? Just a message that pops up when you take the payment. Card tender amount, same as payment amount. So if you have this check, restrict tender amount to the payment amount when paying with card. So if this is checked, you're only allowed to take a payment from, for instance, a debit card for the exact payment amount that's due. Renew options. How a loan is renewed, this might change over time, but this is mostly set up and stays the same throughout the loan, but you might tweak this just depending on your particular loan type. When a customer has made 2 payments or 3 payments on a loan, you might want to renew them to a new loan. So renew after number of payments made. No restrictions. You don't want to renew somebody, so the software will not allow you to renew somebody, say, unless they've made 2 payments on a loan, or 3 payments on a loan, or 4 payments on a loan. This is a setting that you can have for either 1 or 2 payments being a restriction for renewing to a new loan. So you can also renew over $100 at a minimum after 60 days, 30 days. So you can restrict renewals to how many payments they've made. You can restrict renewals to a period of time, say 60 days, 90 days. Want to make sure that they have made several payments on time, or over a period of time, you don't want to renew them to the specific period of time. This is set here. Renewal override over 100 allowed if high credit is higher. Renewal override, $100 or less allowed if high credit is higher. Minimum cash back amount. So maybe if they're only allowed to get $20 or $30 or $40 back on a loan, if that's all, maybe you want to restrict this to say the minimum cash back. So if somebody's going to renew a loan and get cash back, the minimum you want to do is say $100, because you don't want to do anything less than say $100 if you're going to renew a loan. So you put that in here. Without that, then it doesn't matter how much they would get back. You can renew somebody if they'll get $5 back or $10 back, or depending on their loan, any amount. Other options. Aging method. This is how the loan is aged. When somebody comes in and takes out a loan, say for instance today is January 6th, their due date would be February 6th if it's an installment loan, and say for instance 6 or 8 or 10 months is their loan, so each payment would be due every month on the 6th. Well, the software, when you're doing collections, each month when customers due, the software will age the account. The options for it are contractual and recency, best recency. It's best to keep the aging method on contractual so that the software will age the loan, meaning that it's past due based on the contract. When it comes to other aging methods, if you're not familiar with those methods, then that will be explained in a different video. But here, under other options, aging method can be set. The aging date, so first of the next month, the aging date. So the software will age all accounts on the first day of the new month. Another option for that is current date, but it's best to have all the accounts age on the first day of the new month. And all this will be explained in separate videos. Just want to explain that this is where the settings are for the aging date and aging method and date last paid. If you want a partial payment, past due amount to be considered delinquent, 2 times late fee. All of this has to do with collections and fees and other items specific to the aging of the loan. When they're past due, how much you're going to charge. This is very complex and will be discussed, if you don't already understand this section, in separate videos. Loan reversal, how long back can you do a reversal on a loan? So loan reversal. So you give somebody a loan and you want to reverse that. Well, 45 days right now is the max amount of time to reverse that loan, but it can go up to, for instance, 60 days. So up to 2 months, you're going to reverse a loan. Allow loan reversal in the same year. Document signing method, manual or iPad. Right now, it's set to manual. Allow mail phone loans. So if your business allows, you have a customer over the phone and they're like, okay, yeah, I'll if you've set up to where you can send the customer their contract, they'll sign it, send it back, and you'll issue a check, then you'll allow mail phone loan in the software. If you're unfamiliar with this, then this will be unchecked and you'll just do in-person loans. Max extra first due day. State law, max will override the setting. So don't worry about this. This will be discussed in further detail when your software is being set up. So this is the loan information section, whether it be small loan, open loan, large loan, installment loan, the charges, security items, payments, renewal, and other options. These are the settings under config and loan information and what those settings mean. Thank you very much.